So it's been ultimate torture day on oil. This is our trade number 4. And for the reasons are because the minor trend had found support at decision point 1. And price had been bouncing and dancing at these levels, but as I spelled out this morning at the market open, I expected price to break through this level and to migrate to 105 and all the way to 104. I would love to see oil at 104. So trade number 4, this week we had total of 6 trades on oil in these 2 days. So far only 1 negative. So there we go. Decision point 2 is respected. Let's monitor what oil will do when it will migrate to the danger zone levels. As we know, this is my trade exhaustion level. If price will break through my trade exhaustion level, I am having very high probability for oil to make it all the way to 105. So once again, take a look at this level. This reminds you the power, pure price action, and Fibonacci levels. You know where to monitor for reversals and what not to enter into, that at least when I took my short, I had enough space. But that's why I spelled out it was a bit of an aggressive trade, because I know that this is such a powerful level, but because I had a bit of a space prior, allowing me to my first target, I had taken this trade. There is nothing else in this market structure. Adjusting my stop to 105.79. Very critical what oil will do here. This is a stepping stone. This is how price moves between the levels. And it doesn't matter what instrument, and it doesn't matter what time frame. I expect very powerful bounce at this level. I'm adjusting my trail even closer, so only those who have 5 lots or more, those who have 5 lots, only 1 lot left, because 70% is out. Single and double lot sizes and triple lot sizes out. No reason to exercise greed. Please respect these levels. 105.60, very powerful. I don't want to adjust my trail too close, but the battle is on as we're expecting. Here it is, monitoring it closely. Once again, everything I demonstrate on small range charts. Simply because we get massive trading opportunities. But do remember, the number of trades you get on oil, 4 to 10 to 20 times as much as we get on S&P 500 future. Because drastically bigger moves due to poor liquidity. Because institutional volume is drastically higher on S&P 500 versus oil, that's why you're experiencing such comatose market conditions. Because markets are waiting for after FOMC release tomorrow. So once again, if we're gonna have incredibly comatose markets tomorrow, we will close trading room unless oil will give us something to talk about, and we'll reopen around FOMC. Last FOMC was just complete nap time. Thank God for oil. That's why we're trading them, because they so complement each other. The beast of the indices, of course, I'm not talking about DAX. We have a student in the course, girl, yoga instructor Catherine, who trades DAX. When I heard that, I almost fainted. My hero. Seriously. Oil's got nothing on DAX. So there we go. Very close to the danger zone. I'm adjusting my trail very closely, guys, because we know this is my trade exhaustion levels. So we'll adjust it to outside of break-even, because this is trade exhaustion. Very, very critical to know what not to enter into. And formula remains the same. That's exactly where ES had been doing incredibly small moves, because ES had reached this level. What are you witnessing right now? I may be taking long on different time frame, and that's how price moves back and forth, back and forth, back and forth. The battle's still on. In order for the short to continue on larger time frame, this chart has to blast through danger zone levels. This is absolutely expected and respected. And what to expect when my trade comes close to the danger zone? The battle is still on. Danger zone levels to the downside had not been broken. We reached 25 ticks, and I spelled out how essential it was to move your stop outside of break-even, because this is my trade exhaustion levels. Buyers showed up a couple of ticks prior. The battle's still on. Reminding you how essential these levels are.